Nike just reported. Nike absolutely crushed it. I own Nike. Don't ever buy a company because someone on the internet has it. Even if Warren Buffett has it, we're here to teach a process. Nike reported 49 cents earnings per share, beating 27 cents. They crushed by 81.5%. They beat on revenue, 11.72 billion, beating 11 billion estimate. Now, does that mean Nike's out of the woodwork? No, they're still working, but it means their turnaround might be getting some traction here. Now, I don't believe in looking at quarterly numbers and making or break a decision on anything. And the market doesn't seem to be very excited about Nike beating. Why is that? I don't know. I have no clue, but this is what I'm going to look at first. Remember, guys, this channel is dedicated to a little more in-depth look. So quarterly numbers. Let's go back to last year. They actually had an increase in revenue. Last year, they did 11.59 billion. They just did 11.72. And this is the company that everybody said was declining. And it had declined from the previous year, 12.94 billion in revenue, down to 11.59. They reported 49 cents earnings per share. Last year at the same time, they did 70 cents. So a decline there by a substantial amount, about 29%. Let's go pull up their earnings release, Nike earnings release, and see what they had to say about their third quarter. Let's see here. Quarterly earnings. Click on it. Oh, what a cute shoe. 2026. Wait, what? Is this the first quarter of 2026? Maybe it is. I don't even know that. September 30th, 2025. There we go. Okay. Let's check out some things. First quarter revenue is up 1% on a recorded basis. Interesting, because I'm seeing 11.59 before, but I'm sure they're right. Direct revenue is down 4.5%. Wholesale revenues, that means they sell to like Dick's Sporting Goods, Foot Locker, things like that. Ironically, up 7%. That's interesting. Gross margins, this is a lot. A decrease of 3.2% is a big drop. That is a big drop. EPS of 49 cents. This quarter, Nike drove progress through our win now actions in our priority areas, blah, 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 blah. While we're getting wins under our belt, we still have work ahead to get all sports geographies. I'm confident we have the right focus, etc. Now, a lot of people have been talking about Nike being a declining business, and yeah, it might be. But guys, this is the way I look at things. This is really important. The way I look at things is on this principle-driven approach, on this every investment's the present value of all future cash flow. If I pay a price today for Nike and 20, 30 years from now, that Nike makes a lot more money, their revenue is higher, their profit's higher, can I get an adequate return on that capital? Guys, I think a lot of us can think like, what would the world look like with Nike gone in 20 or 30 years? What would have to happen for that to happen? I think Nike's going to be around for a while. The question is, BlackBerry's still around, and they're a terrible company, right? I mean, revenue is down 90-some% or something crazy. So I'm not denying that that's possible. But what would have to happen for Nike to be a company that just stops dominating sports apparel? That's what I'm banking on. I always tell people, when I look at Nike, I laugh. Because here it was, back in end of 2021, hitting an all-time high of 180. And us making a video, you can go back and check, where we said, we're interested sub 100. People are like, dude, it'll never be below 100. Well, that's interesting, because it recently got to $52 a share. That's a decline of over 67%. In our community, the average person has it to hold. And if you're in our community, don't forget to go vote in there, because these votes are only good for 6 months. You got to go in there and keep re-voting. These are important things to think about when you look at a company. And Nike's talked about being in a turnaround position. But guys, they've got the best athletes in the world on their payroll. They've got great brands. They got a great brand overall in general. They have a reputation with, sweatshops and all that stuff, but who doesn't? I just look at it going, name me the number one fitness brand in the world. Anyone? And if you tell me anybody other than Nike, you're just trying to be difficult. That's my opinion. The question becomes, what can they gain in the future? What can they make in the future? At 50 cents a share per quarter, that's $2 a year. That's not enough. That's too much for a company like this. That's not enough for a company like this. But they're turning things around. Usually when turnarounds are happening, costs are much higher. That's what we're looking at here. Let's see what the analysts believe about Nike. Well, they think their profit's going to double here in the next 5 years or so, from $217 a share to $460. $460, let's say you put a premium on Nike, 22 times earnings, you're looking at $99 a share. Essentially, $102 a share, $100 a share. Not a big premium from today. Not a big premium today. So maybe Nike's overpriced. We don't know. I will say this, their revenue, they have it growing. Big 11% decline this year. They just started with another increase, which is great. But at the end of the day, what matters is what does the future hold? The market doesn't seem too excited about this earnings report. It's only up 1.15% right now. I'm actually surprised by this because I thought beating by 81.5% on earnings per share would have been exciting. But guess what? I don't care. And I want you to get that point where you don't care about quarterly earnings results. I want you to care about the company long-term. That's what matters here. So we go to our stock analyzer tool. Guys, I have the ability through a lot of pain and anguish of looking at companies from a long-term perspective. You have the ability through YouTube to cut my learning down 90%. I didn't have this learning. I didn't have the ability to go watch YouTube and see people saying these things. Even now on YouTube, I don't know many people who literally sit there and say, why do you care about earnings results? We do it purely for the benefit of teaching that entire point, which is they don't matter long run. What matters is, now granted, you can see things like, oh, great, they increased their revenue. That's great. That's a big turnaround from what we thought it was going to be. That's a great sign. But I'm not making any buying decisions based on that. I'm not making any selling decisions based on that. Doesn't mean that they didn't say something that wouldn't cause me to be alarmed a little bit, but usually the things they say are very generic. Oh, we're turning things around and we're well on our way, but we have a lot more wins to get, and there's going to be hurdles along the way, and we're going to persevere, and artificial intelligence, AI, blah, 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 blah. Okay, great. All I know is that I feel that Nike is going to be around for a very long time. How long? I have no idea. But my guess is if I can pay a reasonable price for it today, I will probably do pretty decent. So what's the reasonable price? Well, guys, I did a 10-year analysis. And the first thing I did was my revenue growth. I did 3%, 5%, and 7% revenue growth a year for the next 10 years. Maybe it's too high, maybe it's too low. We don't know the future, but this seems reasonable to me. Next, profit margin. And free cash flow, I did 9, 10.5, and 12. I went higher. This is about their 5-year average. I went a little bit higher here because as time goes on, they're going to sell more direct to consumer, which is much higher margin. So I'm hoping they can really drive that margin, and this might be conservative. Now, what's a reasonable PE ratio to put on a company like Nike 10 years from now? I put 19, 22, and 25. They have high returns on capital. They got a great brand. They've got great athletes that are signed for lifetimes. Jordan, LeBron, KD. I don't think they're a lifetime contract with KD, but it's a long contract. I look at this thinking, okay, that deserves a premium. And finally, my desired 9% return. Now, keep in mind, this has no margin of safety in here. This is just for me to say, what's the company worth? If the market does 9 or 10% a year, great. What would I have to pay to get that kind of return from Nike? Now, keep in mind, I don't want to just get a 9% return. I'm here to make above average returns, or else I just buy a low-cost ETF and not think about it. So I need to have a higher number, but I want to figure out what's the value of this business. It's currently at $71 a share. It's now up 1.5%. I hit the analyze button. And guys, before you go, I want you guys to do me a favor. We have this great community. You've probably seen our videos before. If you haven't, keep track of the stock analyzer tool. This thing is used over 1 million times per year, but this is only one of 10, 20 different tools that we have in our software and community. And this was created purely because I sat there and wanted to be able to analyze my own companies and do a data-driven approach to it. But guess what happened? People saw my Excel sheet and said, how do I get that? Well, it was a data feed and all that stuff. So I was like, let's just make it. This was made for me and for everybody. This is the thing I use every single day to analyze my stocks, my real estate, anything that I'm investing in. And on top of that, you have a community of thousands of like-minded investors who are all going to sit there and say and think the same way. They're not going to agree on everything, but they're going to realize that there's certain principles that we believe in as investors. And that's really important. So if you want to be part of that, if you are a serious investor and only a serious investor, we want you part of the community. Click the link below. There's a great trial out there for 7 days. Allows you to test the waters and see if it's right for you. I will tell you, if you're a serious investor, this is right for you. If you're not a serious investor, go find another channel who will feed you garbage stocks to buy for no process-driven reason whatsoever. So I hit the analyze button. The stock's at 71. I have a low price of 50, high price of 109, middle price of 75. Now keep in mind, Nike pays an ample dividend of 2.5%. This return includes that dividend, so don't add it again. This return down here, but it seems like it's probably selling for a reasonable price today. But I think I was a little conservative. Now, for those of you out there who use options to buy stocks, use cash secured puts, I'm going to show you how to do that right now. What that allows you to do is, it allows you to take your cash and sell options for Nike to buy it at a lower price. But guess what? Somebody's going to pay you to buy it at a lower price. Let me show you. So I have the options chain here. Let's go out to October 31st, a month from now. We're going to sell what's called a cash secured put. Now, let's say I want to buy Nike for that $65 a share. October 31st, somebody's going to pay me $1.86 per share. Guys, here's what's crazy. That's going to be a 33.7% return on my cash. And the chance of it happening is 26%. Let's say I want to be more conservative. I want to get it for $60 a share. I'll make 66 cents, which is 13% annualized return on my cash. That's what's different about our channel. We're teaching you how to buy Nike for $10 less, but be paid along the way for doing it. So you either get Nike at $60 a share, less your 66 cents, or you get a 66-cent return on your cash sitting there. You'll get 1% basically for the next month. This is the difference in our channel. If you like that, stick around. Thank you for your time. I'll see you in the community.